Hi, I'm Dee Jacob, President of the Shoreline Chamber of Commerce in Connecticut. I'm happy you've joined me today for a video from our Business Education series. Each video is designed to provide concise and useful how-tos in only a few minutes. Our subjects will range from business to individual know-hows. Now on to today's presentation. Hi, I'm Dee Jacob, President of the Shoreline Chamber, and I'm here with Robert Oman, who is a partner in the Stone Insurance Agency headquartered in Guilford. Rob has 37 years experience in insurance and is a chartered property and casualty agent, so a great person to get answer to our questions about what does an organization need for insurance. Good morning, Rob.
Good morning, Dee.
So in our area, we have a range of businesses. We have single-person entrepreneur in their home office.
Sure.
We have manufacturers. We have retail. We have restaurants.
Right.
I mean, they're all over the map, and we have a lot of nonprofits.
Yes.
Every business I know is not a cookie-cutter insurance answer, but is there one type of insurance that almost everybody should have some coverage in?
Well, a lot of that's dictated by, for instance, a business purchasing a building, and they have to insure the building, and the bank makes requirements that they cover the building from a replacement cost standpoint, as well as outlining limits of liability that they need. Set normal cases where you have $1 million each occurrence, $2 million aggregate under the general liability, and they'll normally ask for another $1 million umbrella. So that's dictated by a bank because a client is buying a building, or if they're leasing a space, the lessor is going to make sure that they're covered in terms of their personal property from a replacement cost standpoint, and again, dictate the general liability limits. So that dictates, the property generally dictates the placement of the account, and that's usually the first sign that a client has insurance. Clients also understand, obviously, that if they have employees, they need to have workers' compensation.
Okay.
They generally will know that. If they have vehicles that they purchase in the name of the business, even if it's for the first time, obviously they need to insure the vehicles on a business auto policy versus a personally owned policy. Also, businesses, just in terms of the auto exposure, should have, even if they don't have owned vehicles in the name of the business, should have what's called hired and non-owned auto. So if that business rents a vehicle for business purposes, the hired policy will respond in excess of the rental car company. And a non-owned auto is a situation in which you own a business and owner or employees are using their personal vehicle for business purposes and are involved in an accident, and the policy will respond in excess of their personal auto coverage.
Okay.
But that's a coverage that every business should have that has any type of auto exposure, whether it's owned or non-owned.
Cybersecurity is big out there.
Absolutely.
And the other side of it is it's two different sides of some of the same issue, which is fraud.
Right.
So how can I protect my business from cybersecurity, and how is my insurance agent a partner in that?
Good question. So obviously this is a newer coverage, and it's changing, and as time goes on, in terms of there's not standardized forms. So we're dealing with a lot of different carriers with different forms, with different coverages. So in this case, it's kind of dangerous for us because we have to make sure that the client is covered properly depending upon their operations. I think most people understand what the cybersecurity is trying to do, but obviously if you have any computers or any medical or any proprietary financial information, then you have a cybersecurity exposure. And it's getting more and more difficult to place coverage, number one, because obviously claims are going through the roof. Number two is it's getting to be extremely it's much more expensive. I'm seeing, minimum of 25% rate increases on most of the cyber coverages that we write. And in certain areas, such as I insure banks, for instance, as you can well understand, the amount of customer proprietary information that the banks have is so important that it's critical that they have coverage with high limits and they have proper underwriting in-house to make sure that that information is protected. Those type of coverages are going through the roof, but even smaller businesses have the exposure if you use credit cards, for instance. And another good point you made is the computer fraud piece of the puzzle. Computer fraud piece of the puzzle is something that comes into play. For instance, if you're in what's called phishing schemes with a P, is situations in which outsiders are sending you information via email, you click onto it, and now they have access to all of your information. But the computer fraud piece of the puzzle comes into play. For instance, what happens, I've had this happen twice to customers. One is a very high-end women's retail clothing store. They called me up and said, Rob, we just sent $19,000 to one of our suppliers via computer, and we didn't verify the fact that the bank had changed, all right? And they didn't verify it via some type of phone call or FaceTime, calling the bank, their contact, and saying, did you change your banking information?
Okay.
And I had another one for about $47,000, that same thing, Quan. They changed the supplier whom they paid had changed. They said they had changed their banking information, but that wasn't true.
Oh, wow.
So the key issue right now, and this is literally within the last 6 months to a year, is it's difficult for us to place coverage for especially new cybersecurity exposures in the event that you don't have what's called MFA, multi-factor authentication, for your email. And I literally have counts right now that if they don't get it, the coverage is going to be either non-renewed, reduced substantially in terms of limits, and substantial high premium increases.
So let me take you one step further in
Sure.
cybersecurity. We've heard these stories of people held hostage for their accounts
Sure.
taken over. And the insurance company has to be involved in that.
That's correct.
I've heard some recommendations that you should have a risk management plan regarding this, involving your insurance carrier. So if this were to happen,
Yes, kidnapping.
you
ransom.
already know what steps you're supposed to take
Yeah.
and what the game plan is, so
Yeah.
you're not caught off guard. So we've talked about external factors, cybersecurity. We've talked about Mother Nature.
Right.
But there are internal issues that happen. For example, actions of a board of directors if you're a
Exactly.
nonprofit, or actions of a manager that might take with regard to employees or call into question.
Right.
So how do I protect myself from that, both as whether a nonprofit or a business?
Another great question. So there's a coverage called directors and officers liability, and normally we write that in conjunction with what's called EPLI, employment practices coverage, and what's called fiduciary liability. So the directors and officers liability coverage is covering the company and the actual board members personally, because in the event that the board members make business decisions that are detrimental to the business, in certain cases they can be sued personally. And if you're one of those people, a board member, you obviously want a policy that's going to respond and defend you personally as well as defending the entity. In the event of poor business dealings, for instance, that's usually when the directors and officers liability comes into play. But that's a very general idea. If a business is failing, employees and others can deem the board of directors to be the ones that are at fault for this situation, when in actuality it's simply a competition or business-related exposure, but the policy will defend you. So you're basically paying for defense costs in that regard. The employment practices liability, we write that in conjunction with the director's officer liability because the directors and officers can be brought into that suit for improper supervision of employees for sexual harassment, discriminatory situations. Fiduciary liability is the third piece of that puzzle, which pulls in situations in which you as the employer say, all your 401k money is going to go with this particular brokerage. That brokerage takes the $1 million 401k and it dwindles down to $500,000 and you're going to retire the next year. And you say, you know what, these guys improperly invested my money. I'm going to sue me, or there's going to be a class action suit against the board because of because they chose the people whom the 401k is managed by.
Well, I want to thank you, Rob,
Thank you.
in terms of providing some things that we should think about. And I also want to advise our listeners, your insurance is a necessary expense, but it's also your insurance agent is a partner in your business. And please make sure that you are reaching out to them and making sure you're getting the most from that relationship for your business. Thank you, Rob.
Thank you, Dee. I appreciate it.